Welcome back to Investing Talk podcast. Trying to make sense of volatile markets, especially energy, it can really feel like you're just drowning in news data.
Oh, absolutely. So much noise. And that's what we try to do here, help you sift through it all. We gather up the information, the updates, the reports, and pull out what seems most important.
And today, our focus is on a company called Indonesia Energy Corp. We've been looking into their recent performance, financials, what they're doing operationally, and, well, what's been driving some of the chatter around them lately.
The idea is to give you a clear, quick picture of what's going on with them. Really highlight the stuff that probably matters most from what's out there.
Right. And before we get into the nitty-gritty, if you find this kind of breakdown useful, we'd really appreciate it if you hit subscribe. Liking the video, leaving a comment, that helps too. And if you're feeling generous, maybe consider buying us a coffee to support the show. It all helps.
Okay, so Indonesia Energy Corp. They're an independent oil and gas company focused on exploration and production, primarily, as you'd guess from the name, in Indonesia.
And they've got two main things they're working on, basically. First is the Cru Block. That's where they're actually producing oil right now. It's in South Sumatra.
About 258 square kilometers, that one. Then there's the Citarum Block, much bigger, over 3,900 square kilometers in West Java. But that's purely exploration at this stage.
Got it. And the company itself, not that old, founded 2018, based in Jakarta.
Correct. Relatively new player.
Okay, so that sets the scene. Let's talk numbers, because that's often where, the reality check happens.
It really is. And the first thing that jumps out is just scale. Or maybe the lack of it. This is a small company. Their trailing 12-month revenue, based on the latest info, is only around $3.5 million.
$3.5 billion. That feels pretty small for energy, where projects cost a fortune.
It is quite modest. And yeah, they did report decent quarterly sales growth recently, year over year, something like 21.4%, which sounds good in isolation.
But the context is key. Over the longer term, achieving really consistent, significant revenue growth seems to have been, well, a challenge for them. They're still very much a small fish in that pond.
And the crucial question, are they actually making money, the bottom line?
No, not yet. They're operating at a loss. For 2024, net income was negative $2.53 million.
Okay.
Now, that is better than 2023, when it was negative $2.64 million. And it's a lot better than back in 2021, when the loss was over $6 million. So the losses are shrinking.
Shrinking, but still negative. So things like earnings per share, PE ratios, the usual metrics.
Well, with negative income, your EPS is obviously negative too.
Yeah.
And a standard price to earnings ratio just doesn't work. It's not meaningful when a company isn't actually earning anything over the past year.
Right. Can't divide by zero or a negative number in that context. What about other financial health stuff, like cash flow, debt? Did you see much on that? Some of those details, like free cash flow, debt to equity, return on equity, they weren't readily available in the sort of summary information we looked at. You'd really need to dig into their full annual reports or SEC filings for that level of detail.
Standard procedure for deep dives, really. Go to the source docs.
But what was noted generally is that their debt levels seem relatively low compared to others in the industry.
That sounds like a positive, maybe more conservative financially.
It can be, yes. Less leverage risk. The flip side, though, is that they also seem to have pretty limited cash reserves on hand.
Ah, okay. So low debt, but maybe not a huge cushion if things get tough or if they need to invest heavily.
That seems to be the picture. Tight resources overall.
Okay, so financially. Small, losing money, but losses are narrowing. Low debt, tight cash. But recently, something seems to have sparked some interest, operationally.
Yes, exactly. This is where things get more interesting and probably explains the recent attention. Back in May 2025, they put out an operational update about the Cru Block, their main producing asset. And it was pretty significant.
What did they find or announce?
They finished up some seismic work and exploration analysis at Cru during 2024, and the result wasn't trivial. It led to a really substantial increase in their proved gross reserves there.
How substantial are we talking?
More than 60%, a 60% increase. Their proved gross reserves at Cru are now estimated at about 3.3 million barrels.
Wow. Okay. A 60% bump in proved reserves in your main field? That's a big deal, especially for a small company. That's finding more oil basically right under your feet where you're already working.
It really is. It changes the outlook for that core asset quite a bit. And kind of related to that, they also got good news from the government, a 5-year contract extension for the Cru Block, granted late last year in 2023.
So they found more oil and they have more time secured to get it out. Seems positive. What's the plan to actually do that?
Well, that leads right into their plans for the second half of this year, 2025. They're intending to get back to drilling at the crude block.
Resume drilling.
Yeah.
Okay, so they're gearing up to actually tap into those extra barrels they've identified.
That seems to be the plan. It's part of a bigger multi-year program they've talked about, aiming for up to 18 new wells eventually at Crew. But specifically, at least one new well is slated for late 2025.
And that seismic data you mentioned, I guess that helps them figure out the best spots to drill, make it more effective.
That's the idea. They expect that new data will be key for picking better drilling locations, improving their chances of success with this new campaign, trying to maximize what they get from these increased reserves.
Right. Do the homework, find the oil, secure the rights, sharpen the drill bit. Makes sense. How did the market take all this news, especially given the tricky financial situation?
Well, you saw a pretty clear reaction in the stock price. Specifically on June 13th, 2025, the shares really jumped.
How much are we talking?
It was pretty dramatic, up somewhere between like 24% and 36% during the day's trading.
That's a major move for one day.
It is, and it really looks like it was tied directly to this renewed optimism from investors, stemming from the bigger reserve number and the fact that drilling is about to restart. You saw trading volume pick up a lot too, and more people talking about the company online around that time.
So the operational news definitely got people excited. Did management mention anything else that might have contributed to that rally?
Yeah, there was another element. Management has started talking about a strategic intention, potentially, to expand beyond just traditional oil and gas.
Ooh. Expand into what exactly?
They mentioned moving into broader energy sectors. The thinking, they said, is to make the company more resilient, less exposed to just oil price swings, and maybe capture some opportunities in, sustainable growth areas.
Yeah.
The specifics weren't really laid out, though.
That sounds ambitious for a small company primarily focused on drilling. A pivot towards maybe cleaner energy or something different.
It does sound ambitious, but even just signaling that strategic thinking, that possibility, seemed to land well with investors. It might suggest management is looking ahead, exploring ways to diversify and grow beyond the current setup, even if it's just an idea right now.
Okay, so we've got this picture. Financially constrained, but with a big operational win, a plan to drill, and this hint of a strategic shift. Let's try to balance it out. What are the main opportunities versus the main risks here, based on everything?
Okay, opportunities. The big one, clearly, is that 60% plus reserve increase at Crew. If they can successfully drill and produce that oil, it could mean significantly higher revenue down the road from their main asset.
Big if on the successful drilling, though. Right?
Always an if with drilling, yes. But the potential is there. Another opportunity is the profit split. Under the extended Crew contract, their take of the after-tax profit could potentially go up quite a bit, from maybe 15% historically to potentially around 35%.
Doubling your share of the profits per barrel, that could make a huge difference to their ability to actually reach profitability.
Absolutely. It could fundamentally change the economics for them. Then there's the drilling itself. Successful new wells mean more production. And, longer term, that strategic diversification, if it ever happens, could open up totally new avenues. Plus, as we said, the relatively low debt is a plus.
Okay, plenty to be hopeful about if things go right. What about the downsides? The risks?
Well, the elephant in the room is still the fact they're losing money. Persistent operating losses. It just underscores the challenge they face in becoming sustainably profitable, even with these operational steps forward.
So finding the oil is one thing, making money from it consistently is another.
That's it. And being small makes them vulnerable. Oil prices swing wildly. A big drop could hurt them badly. They're also just more exposed if something goes wrong operationally compared to a bigger company with more assets.
And the execution, actually pulling off the drilling and this diversification idea.
Huge execution risk there on both fronts. Can they drill these new wells effectively, on time, on budget? Will the wells produce as hoped? And the strategic shift into new energy areas, that's a massive undertaking with a lot of uncertainty. Plus, you always have potential regulatory changes or just plain bad luck operationally as risks. Good news that there weren't reports of major lawsuits recently, though.
How does a company like this compare to the bigger players in Indonesia? say, Medco Energy or Energy Mega
Yeah.
Prasada?
Oh, it's a completely different league. Those guys are much, much larger. They benefit from economies of scale, often have diverse operations, maybe refining or marketing too. They generally make profits, have stronger financials. Indonesia Energy Corp is really a microcap trying to prove itself, mainly on just a couple of upstream assets.
Right. So given this mix, real operational potential, but also significant risks and financial constraints,
Yeah.
what's the general feeling in the market? How are analysts looking at it?
The sentiment, especially it seems among retail traders, is sort of hopeful but cautious. Maybe speculative optimism is a good way to put it. That stock surge shows people are excited by the reserve news and the drilling plans, seeing them as catalysts. There's definitely interest in seeing if they can turn those reserves into real cash flow.
Are the professional analysts jumping on board?
Coverage seems pretty limited, which is normal for a company this size, but the ratings that are out there seem to mostly be around hold.
And why hold? What's the thinking there?
It likely comes down to those risks we talked about. The execution risk is high for the drilling, for the strategy pivot. Analysts probably want to see proof. They want to see successful wells coming online, sustained production growth, actual steps towards profit or diversification before they get more positive. The plans sound good, but they need to deliver results.
Okay, that gives a really clear picture. So summarizing quickly, we have a small energy player, Indonesia Energy Corp, that's been losing money, but they just announced a really significant increase in reserves in their main producing block and have government backing to keep working it.
Right. And that news, plus plans to drill soon and talk of maybe diversifying later, really got the stock moving and people interested again.
And understanding these pieces, the tough financials versus the operational promise, the execution hurdles, how the market is reacting, it's really key for you, the listener, to build your own informed view, especially with these smaller, more volatile companies. It helps you see the story behind the headlines.
It shows how operational wins can be exciting, but they don't just magically solve underlying financial challenges or eliminate the risk involved in actually following through on big plans.
So here's something to think about. When you look at a small energy company like this, with all the inherent uncertainty around drilling success and very early stage strategic ideas, how much weight should you really give to that potential upside from more reserves and diversification compared to the current reality of ongoing losses and the simple fact that it's tough for small companies to make it big and branch out?